Hey guys, it's a market update. I'm actually quite encouraged by the price action at the beginning of this week. We're seeing some buyers come in again. Price is a little bit firm. You can see for ETH as well, some outperformance there. I think the buyers are still here trying to buy dips. Like I said in the previous video, this breakout kind of failed. Well, it didn't fail, right? Because we hit an all-time high, but we had a big kind of all-time high box here that was getting a lot of resistance. We broke out from that. I thought we were going to go a bit higher into maybe 130, 140 level. We reached 122, so I was 10% off on that call. Not a big deal. All my short-term trades are still on. I'm not getting out here. A little bit of weakness here is fine. We can consolidate for a while, and I just think we go higher into these levels towards the end of the year. I'll show you exactly why I think that in this video. I'll explain all of this data right here. But if you trade crypto or Bitcoin, click the link down in the description to Bybit. If you're a new user, anything you deposit, they'll give you a deposit bonus to trade with all the way up to $30,000. Are we still in an uptrend, and do we continue higher into the end of the year? I think so. My trades are on as well, waiting for that to happen. So why do I think that? We got this big downward revision in job creation last week in the data anyway, right? And so notwithstanding all the chatter around if that data is accurate, as soon as that happened, two things come out. Firstly, recession hawks say there's going to be a massive crash, right? And then secondly, you just get all the investment banks saying the Fed's just going to ease, right? So any weakness in economic data, which we know is basically all fake anyway and backward looking, the Fed's just going to ease, which means that markets go higher, right? So if you get a weakening in the currency, markets go higher. You can see short end rates are starting to come down, reflecting an easier Fed as well. Easier Fed, rates down, more inflation. So maybe long end rates actually go up if you're going to create more inflation now, but that's the whole point. They want to create inflation, right? The thing that they fear is deflation. The thing that they create on purpose is inflation. So if their backward-looking data is showing some weakness, they're going to create inflation now, right? Which markets will price in now. And that inflation that they're creating now will come out in 18 months' time or 12 months' time, which will create the next downward market for Bitcoin, because that's when the Fed has to react and come stronger again. This is not the Bitcoin chart. This is Bitcoin dollars. This is the dollar chart. This is the dollar cycle. This is the rate cycle, right, that we're looking at. Is the dollar as weak as it's going to get in this cycle? And they're going to start, raising interest rates again? I don't think so. If the data is getting weaker, they're going to ease. It's not just the Fed either, right? Trump is taking a lot of dollar creation away from the Fed, which we've had in previous cycles. You've got the big investments, the trade deals with big investments here, right? Korea, Japan, the Middle East, cumulatively trillions of dollars worth of investment into the States. These countries can create dollars. They create euro dollars outside of the States with the international investment banks and the development banks. They can create dollar liabilities and pour them into the States. That's dollar stimulus. That's not coming from the Fed, but it is coming from other means. So that's dollar stimulus. It's not all coming at once. Right, it's coming over, let's say, many years, but that's dollar stimulus. The game is to debase currency, print currency to buy work. Print currency to buy work. Bitcoin prices that in because you can't debase it. So there's a lot of dollar stimulus coming, and I just don't think we're at the peak of that. So I think we go higher. And any economic weakness in that fake data, they're just going to ease. The central bank's just going to ease if they need to. So I think we can go way higher into the end of this year. This white line is typically when the Bitcoin cycle tops out. If you look at this, we have, it's here, another 150 days until Bitcoin typically tops out, right? So this was, 2012 cycle. Let's take that out. You've got the 2016 and 2020 cycle here, topping out around 550, 600 days or so. We're at 460. So just from previous cycles, we're not even at the peak. You're looking at the dollar cycle here, not the Bitcoin cycle, right? The dollar cycle hasn't peaked in my opinion, so I still think we go higher and trades are on. Now, this is short-term holder SOPA as well. If you're in an uptrend, you buy weakness in SOPA, right? So as you can see here in an uptrend, you can see SOPA dips below 1 here. That would have been a great buy, right? Another sell-off here, great buy. Another sell-off here, great buy. Another sell-off, great buy. All of this was great buys here. And yep. That was the all-time high for Bitcoin, but we've pulled back to around 1. If you think we're in an uptrend, you buy this. Don't think about the price, just think about the on-chain metrics. If you think we're in an uptrend, this is a buy. Yeah, it can go lower, right? But you accumulate, right? you accumulate over time. So if you think we're in an uptrend, you buy here, and that's it. And even by the peaks, right, if you're dollar cost averaging, it doesn't matter. SOPA, I'll leave this link down below, checkonchain.com. You can see that metric for yourself, right? So if you think we're in an uptrend, you think we go higher. Now, I'm going to update the crypto course as well. Like I said, this is my long-term Bitcoin chart. I'm going to make a video about the next 10 years and what I think will happen and kind of my strategy there. If you have the crypto course already, I'll update that video and I'll send it out to you guys so you can watch it. If you don't have it, I'll just leave the link to the crypto course down below. When people invest, right, what they're really looking to do, firstly, is just defend themselves against fiat currency debasement, which we know happens. Everyone, even if they're not massively, savvy about investments and everything, everyone knows that rich people own stuff and not cash, right? Having cash, that you're not rich. You're rich when you own stuff, assets, right? Property or anything. Bitcoin is digital property, but Bitcoin really is a worldwide financial index to invest in. I think money is the broadest financial index, right? When you own Bitcoin, what you're doing is indexing world economic output, right? Every single person that owns Bitcoin, that is who you're indexing. And now corporations, and as it proliferates, governments as well, right? So that's who you're indexing. Bitcoin is the broadest financial index. And so you can compare it to other financial indexes like the S&P, right? But the S&P, right? Most companies don't actually make much money. They just kind of bumble along and they don't make much profits. So you can see here that really the only companies that are really making excess money is the Mag 7, right? You can see S&P 500 going higher, but then if you look, it's the top 10 stocks here that are actually making all the money. So remember, currency, right? Because they're earning currency. Currency doesn't exist, right? How much currency can you earn? You can only earn the amount of currency that's in circulation chasing products, right? If you print more currency, it's not that these companies are earning more, they're just earning the same percentage of the amount of currency in circulation. These 10 companies are actually stealing revenue and profits from these other companies, essentially. That's what we're seeing, right? When you invest in an index, what you're saying is, I just want to index the world and make sure that I'm not in fiat currency because that gets debased, right? So that's what you're doing. And Bitcoin is the broadest index, but it's going up at like 3 to 4 times the S&P. And so it's the trade of our generation, right? Because you've got this thing that is the broadest possible index. It should be the most boring thing in the world. Like, no one talks about the S&P, right? Or what's the S&P doing today? Who cares, right? Yeah, it's just like a savings vehicle. Bitcoin should be that. And it's actually broader than the S&P, but it's going up 3-4 times the S&P. It's the trade of our generation, right? You've got this big boring thing that's going up like 30% a year, 40% a year. It's a trade of our generation. Investing is just saving yourself from currency debasement. Ferraris apparently go up 6% a year. You can see it costs $431,000 to buy a Ferrari. The figure has grown by 6% annually over the last 5 years. But has it though? So we're looking at stocks and the stock market going up over time. Is it going up though? Ferraris go up 6% a year. For rich people, right? Not really, because the money supply over the last 5 years, right? So Ferrari's gone up 6% a year over the last 5 years, but the money supply has risen. This is M2, right? So money supply, this is US money supply, not a perfect metric, but it just shows and proves the point. Since 2020, how much has the dollar actually, increase in supply? The yearly rate of growth for US money supply over the last 5 year period is approximately 7.32%. But Ferraris have gone up 6% a year. So if you're measuring from zero, you're getting wrecked, right? Cash is zero. So if you hold cash, you're getting debased by 7.32% a year, which actually is, if you look over decades, that is the long-term rate of money supply growth in dollars, around 7%. So if you're measuring from zero, you're already getting wrecked by 7%. Ferraris are not going up in price. Okay, they are actually going down in price by 1% a year, 1.32% a year cheaper, because you shouldn't measure from zero. You need to measure from 7.32%. So if you measure from 7.32%, the S&P, it's not really going up that much, is it? Right? Maybe a few percent a year. That's it. Not 10, 12% a year. These 10 companies here are basically stealing the revenue from others. So if you invest in the S&P, you're basically investing in 10 companies. If you invest in Bitcoin, you have this much broader diversified exposure to assets and economies worldwide. I know that most, like 40% of the S&P's income comes from abroad as well. It's a great index, right? It's like the index to invest in. But then Bitcoin comes along and it's broader and going up higher, which is why it's a trade of our generation. But measuring from zero is a big mistake. You have to measure from 7 to 10%. Then you can see what's happening. Ferraris are going down in price. The money supply constantly increases. Where on this chart has money supply gone down? So if you're investing here, this is it, right? Please just get out of currency with as much as you can, right? I know you have dollar liabilities or fiat currency liabilities, but the best fiat currency debase is at 7.32% a year. So you have to beat that as a hurdle rate first. Because Bitcoin is the exact same thing every single day, what we're actually asking, right, is not, is Bitcoin going to go up in price? What we're asking is, what's going to happen to the dollar, right? When you're looking at the exchange rate, what's going to happen to the dollar over the next 6 months? Is it going to get debased? Is it going to get weakened? Yeah, of course it is. That's the whole point. Look what they're doing. The big, beautiful bill, stimulus, pouring more currency units in. The trade deals, dollar creation from outside the US pouring in. Weak economic data, the Fed can get easier. Weakening of the currency. It's a whole thing, right? You had Trump saying last week, we actually make more money from a weaker dollar. That's better for us. So you have the people in charge actually saying, we just want this thing as weak as possible. You have to be out of that. You have to know that that's the game by now, right? The game is own assets and own the best asset, right? Bitcoin going up and demonetizing the NASDAQ and the S&P and gold over time. It is the trade of our generation. This is S&P earnings over time. Where are they getting this money from? Right? Because they can't produce money. That's illegal. Where is it coming from? Why are they earning so much more? It's not because they're earning more. It's just because there's more currency being printed. So get out the currency for sure. They're not earning more, right? They're just earning the amount of currency that exists. That's what companies do, right? So the currency will debase. So when we're looking at Bitcoin potentially going higher, what you're saying is the currency going to get debased? Yeah, of course it is. Right? Faster or slower, we don't know, but of course it will. This is a great chart to show the difference between Bitcoin and fiat companies, right? This is Bitcoin treasury companies who are selling equity to buy Bitcoin. And first up, you see a very high MNAV, right? So the equity is being priced a lot higher than the amount of Bitcoin on the balance sheet, right? Because people are saying, well, you're going to keep raising money, so the amount of Bitcoin per share is going to keep going up, right? But what you can see is a crushing of the premium that people are paying for the Bitcoin, right? So you have equity. Let's say you've got $1 billion of Bitcoin and the equity is valuing the company at $2 billion, right? So 2x MNAV, because the equity is worth more than the actual Bitcoin they have on the balance sheet, because they expect to keep selling that and growing the Bitcoin per share. But over time, competition drives that down. And this is the perfect difference between the fiat system and Bitcoin, right? Is that entrepreneurs will attack some area which has returns and just absolutely demolish those returns over time. Every product and service eventually becomes commoditized, and the yield that you can get from that goes down, right? And you can see it right here with Bitcoin. You can't constantly earn more and more Bitcoin. It's impossible because there's a fixed supply. So the arbitrage that you can get from innovation gets crushed and things get cheaper over time. Everything, right? But when you look at the fiat system, different. So that is the biggest, starkest comparison I can make. Fiat keeps going up. They're not actually earning more, right? It's just there's more currency units. This is real life. Whereas you see an arbitrage, you see a profit opportunity, you go in and entrepreneurs make the money, but then it crushes down to commodity status. That's what this is. That's what's happening here, right? And that's the difference, because I saw a video on Twitter. Someone said, still doesn't understand Bitcoin. You're just buying Bitcoin to sell it to someone else at a higher price. Absolutely not, because they're fixated thinking that currency is actually money, that fiat currency actually means something. It means nothing. Fiat currency is irrelevant. If you have real money, you have the money and you spend it at some point in the future on a good or a service that is something desirable to you. So I'm not selling Bitcoin for dollars in the future. I'm going to sell it or spend it to someone else that's producing something that I desire. That's the complete difference that people don't get, is that Bitcoin isn't an investment. Bitcoin is money itself. I earn money, I save money, and at some point in the future, I'll spend it on something that makes my life better. But I'm not trading it and investing it and trying to sell it for more like currency, because it's garbage, because it inflates around, right? Currency is something we exchange, like for an actual sale, but that's not money. And that's the difference. Why would I sell Bitcoin for this garbage, which is just exponentially going higher, right? When actually what Bitcoin is doing is making everything cheaper. So Bitcoin is not an investment. Bitcoin is money itself. So you earn the money, you save the money, and then in the future, when prices of the things you want to buy come down to a level that's good for you, you can spend it. This chart proves that, right? Entrepreneurs make things cheaper over time as they attack some profit center and they produce goods and services, or everything brings the price down. So it's not just about valuing Bitcoin in dollars. It's about just buying money and earning money, saving that, and waiting for the world to just reduce prices, because prices cannot reduce in the fiat system because there are more units over time, but they can reduce when you're holding Bitcoin. So do I think Bitcoin goes higher in this cycle? Yes. Do I think the dollar will continue to debase? Is there more stimulus around from other central banks going through international investment banks, creating euro dollars, pouring them into the States? Yes, I think that's going to happen. That's where my trades are on. Maybe I'm wrong, maybe I'm right, but I'll either make or lose money based on those trades, right? So if you do trade, Bybit deposit bonus down below. The crypto course I'll link as well. I'll be making a big update on this and the 10-year view that I have for crypto course members as well, link below. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.